Joining me now to talk more about the markets is David Wright. He's head of quantitative investments at Pictet Asset Management. David, it's great to have you on the show.
Thank you.
What storylines are you watching most closely when it comes to trading this week?
I think a lot of people, we're very interested in the magnitude and the direction of a lot of the moves that are happening around earnings seasons. Now, like a lot of investors, that's maybe looking for some concern about the AI CapEx cycle or maybe tariffs. But for us as a stock picker, particularly one that are using AI to enable their process, we're most interested on whether those trends and behaviors are a little different to normal and how our models will respond to that.
Your company, Pictet, has a long history as an institutional manager. Tell me about your expansion into ETFs.
Well, we're really excited to be bringing our institutional quality products to the US market. So we've launched 3 ETFs. That is based around our thematic and quant capabilities. And while we've been here in the US, we've been increasingly asked to bring this to market. So that's what we've done. It builds on years of innovation, and the strategy that my team is running, P-Quant, an AI-enhanced EFI international strategy, really reflects that innovation.
What sets the Pictet AI Enhanced International Equity ETF apart from an enhanced index strategy?
Okay, so firstly, it is the ability alongside to give the best of a passive strategy, the fact that we can deliver consistent compounding active performance on top at an attractive price. We do that with a transparent AI-enhanced strategy that is truly factor neutral, so there's no hidden style bets. And I think based in our hub in Geneva, the fact that we can hire in from places like CERN, the world-leading physics lab, where some of our people have learned machine learning in fields like particle physics, really give us an edge here.
Interesting. So how does your AI approach generate alpha?
It generates alpha by analyzing and identifying thousands and thousands of non-obvious relationships from stock patterns historically. It does that in a way that is truly factor neutral, so making sure that all bets within the portfolio don't offer any kind of style exposure. And we do that by having a very disciplined and repeatable portfolio construction process alongside that AI model.
Interesting. And how does it do that while still maintaining factor neutrality?
It does that in a couple of different ways. When we train our model, we're very focused on just identifying stock-specific drivers of returns. And again, it is very much about the portfolio construction piece as well. So we don't let the strategy deviate too much from its benchmark along common factor lines. That means that it is then truly stock-specific alpha that is independent of the economic and market regime.
What are you seeing across markets right now? I know we started this segment by setting up the trading week, but we are now well on our way here into the final and fourth quarter of the year.
Yeah, I mean, I think a lot of people, we are seeing a lot of these trends, they do have legs. The AI CapEx side of things, a number of people have come out with good numbers. Maybe I would just put that in a little bit of a context of an AI practitioner though. We're increasingly finding that we're not having to use as much compute power, as much energy, maybe it's not as many chips to train our models. Maybe that does say something about that AI CapEx spend in the future.
AI CapEx spend probably is the most in focus, we know, especially amid this earnings season. And we are going to get some artificial intelligence companies that are more apt in that space reporting results this week. Is that something that you're following?
We do, of course, but again, it is more so to try and understand, is the market behaving as the way we might have done historically? Is it behaving in the way that our models would have been trained historically? So we have to focus on this very carefully to understand some of the patterns that we see through previous reporting periods, are they going to play out through this one as well?
Anything more you can share with our viewers about your goals at Pictet?
I think we want to make a success, clearly, of this new ETF range that we've launched. The fact that we're bringing the best of what Pictet does on the thematic of the quant side, and we're offering that to our ETF investors in products like P-Quant, I think that is going to be a big strategic aim for us over the next few years.
All right, David Wright, he's head of quantitative investments at Pictet Asset Management. David, thanks again for joining us in studio.
Thank you very much.
Great to have you.